All right, team, what's up? This is Ruben from TGE, and I want to. This one's about me, actually. This is my own problem, but somehow I came out somewhat surviving this trade. So, this Elf had earnings. Elf had earnings. Let me see when they had earnings. Elf, and I was long on Elf. The problem here is that I took a leap option trade on Elf for let me show you. I took a leap option on Elf before earnings because on paper, and I think I wrote it down here. You see that gap down, anyways. It gapped down from like 90 to all the way down to $60, pretty much. On paper, everything lined up. Their EPS was good. It looks good. Growth, right? But there's just one thing we cannot know about until earnings, and that's forward guidance. And but like any trade, we can only make educated hypothesis. That's the best we could do. We can't predict the future. We just we have data in front of us, and we make an assumption based on that data. And if we think that it looks good, then we take the shot. And if it doesn't look good, we don't take the shot. And that's it, right? So I took my shot on Elf Leap through earnings. I thought it was beat down already. And actually, let me show you the chart again. So what I'm seeing here is that they had growth, right? They had growth here for they did well. They got 74 EPS. This is pretty good because when I'm looking at this chart, I was like, oh, you guys are trading all the way back down to these levels. Like it doesn't make any sense with their current EPS growth and their revenue growth. It should, if it was to beat, right, the 75, it should be back here to like these all-time highs, right? 144. Because not too long ago, quarter one was 110. So these were the 173 areas, 147. So I was like, okay, they got growth going on here and they're undervalued, and we believe that it's going to go up higher, right? And there's a couple other things that we looked at, like the option premiums and the implied volatility. So I took a leap option for this trade, and it failed. Okay, it went down on open, and the reason they went down actually is because they lowered their guidance. And again, that's stuff that we cannot predict. That's stuff that comes out during the earning call, right? So, or during the earnings report, they lower their guidance. So that was that, right? So I said here that I got a leap contract, and as soon as the market opened, Elf earnings, it tanked 20% that day. And I thought I was going to be at a low of 75 because that's what the option premium was telling us, that it was going to be 75 at the most. But it actually ended. You can see here on the chart below it. It actually opened at 63% at $63 per share, and I was prepared. That I was like, this is going to be a 50% max loss, but it ended up being a 70% max loss on that trade. So I took a hard hit, and it happens, right? Like I can't like beat myself up for that. We don't know where that stuff is. Like I've always said this. Price is random. I don't know where it's going to be at. We can only make educated hypothesis based on the data that's in front of us, and that's fundamentals, and also the option premium, right? News and all that stuff. Okay, so there's that. And I said losing money isn't fun, and that shook my confidence as a trader. Like anything, I've been trading for like 5+ years now, and stuff like this still kind of gets me every now and then. I'm still human, but I have to just remember to I need to like um, gain my composure back so I can focus, right? I need to focus. Just because I took this trade as a loss doesn't mean it's the end of the world. Like I need to get back into it and focus. And I can't be, and by focusing doesn't mean like being emotional. So I have to gain my composure back. All right. So then I said January spoiled me. Yeah, the January 2025 was the best month I've ever had because I pulled a 214% return on my account, which was amazing. So this elf trade was a punch in the gut. It really was. But here's the thing: you can't let one trade define you. right? And a lot of folks do that because a lot of traders, they take a trade and they get scared because they lost money. They got hit really hard. They weren't prepared for that. So I said, inside TGE Max, we traded CRM and took 2 strikes out, right, out of the money. This was Friday, I believe, right? Let me see. Right. So they reported Thursday after hours. So this was Friday when I took CRM. The first contract hit 134%. The second contract hit 227% return. So we also grabbed snow calls that day, and I didn't screenshot that, but it was another 40%. So overall for that day, it was a 400% return. Now, this doesn't mean that I recover my ELF losses because ELF was a leap option. My size was a little bit bigger. It was about 1%. And the zero DTEs, they're less than half of a percent. Okay, so I'm not able to recoup all of my losses, but I did make up most of it that day. So these were zero DTEs, so I couldn't size as aggressively as usual. Risk management comes first always, but even with that, I ended the day nearly flat despite a rough start. Yeah, I was just a little bit down on the day. And yeah, my teammate over here was saying like, "Fuck yes." Okay, so he's like, "How did I manage to pull through ELF loss?" So I said, "I have to stay sharp. I have to be mechanical. I have to define risk and take action." Right? Like I said, if I let one trade make me hesitate, then I'll miss the next opportunity. Right? If I was to look at that trade and I lost, and I said, "Oh, like I don't want to trade anymore." No, like the market's still running. Like it's gonna go with or without you. So I have to get my composure back. I have to look at the parameters that I defined, right? And CRM at the time met those parameters. If I let that trade like take me out like that, then that would have been bad, right? Like we're here to make money, okay? And we're gonna lose money, but we're here to make money and find opportunities. Our main goal, besides making money, is like we want to find good trades. And CRM was a good trade. It was a good setup, so we took it. And I said, this game is brutal, but you can't let them change your system, right? And a lot of traders that I see, they try a strategy for 2, 3, 4 times, and maybe one works, and the other 3 times it doesn't work, and then they want to switch. They're like, this doesn't work. It doesn't work that way. It's a game of probability. You need to, again, risk management is always first. Like you always want to do this because this gives you more swings. Um, what did I say? At bat or whatever. So like you have to one, follow risk management, and two, can't give up after 4 tries. Like if there's a proven strategy that works statistically, right? And you have to measure that yourself as well too. You have to give it enough time. And I'm not talking about 2, 3, 4 weeks. I'm talking about a month, 2 months, 3 months out. When I came up with a short-term trading strategy that we use inside TGE Max, I tested that for like half a year to make sure that the parameters were tweaked. And that's how we're able to, the same strategy that we're using for short term, which is sometimes it works as a day trade, sometimes it works as a swing trade, a short term swing trade, is the same strategy that I use for CRM. The ELF trade is a completely different strategy. That's more based on fundamentals and growth on the future, right? Completely different strategy. The thesis is created differently. CRM is a completely different strategy built for short term volatility. And so when you try something, don't let it like change your system. You have to try it out, and sometimes that means uh, trying it out for 5 to 6 months. Okay, so be mechanical, define the risk, take action. Right. I said the game isn't about winning every trade; it's about staying in the long game enough to win big. Right. For me, this wasn't a big win day. I know I ended up a little bit red for my account P&L, but um, honestly, solid trades. I executed ELF the way it was supposed to be executed. The drop was unexpected. That's something I cannot control. So, but what I did instantly was cut the trade off, right? Because they're forward guided. The only way I change my thesis is when the data changes. Okay. And so in the case of ELF, the forward guidance changed, so now my thesis has changed, and I have to cut the trade off. Period. Mechanical, right? For CRM, what was I gonna say? For CRM, it's the same thing. Like it's mechanical. I have to just follow the plan as I have written it out. Okay, and then that helped me kind of, by sticking to the system, I was able to at least recoup most of my losses. So that's it. That is how you stay composed through a losing trade. And if you want to work with me or you want to be part of the TGE family, I'll put a link in the description, and then feel free to join and book a call. All right. Peace out.